Apartment investing is a profitable endeavor. Just how does it help you provide exceptional returns on your investment? Today, I'll be talking about 4 reasons why apartment complexes help you turn a profit. Welcome back, investors. I'm Brian Wagers, and on this channel, I'll show busy professionals like you how to invest in apartment complexes without spending hours of your own time. Make that first investment by clicking the subscribe and like button so you don't miss an opportunity. You can make money in apartments a ton of ways. Today, I'll break down 4 ways that apartments help you provide a great return on your investment. The first profit center of apartments being cash flow. Cash flow is what is left over from your gross income after you pay your expenses. Your gross income being your rents, your RUBS, your laundry utility, etc. Your expenses being maintenance, capital expenditures, insurance, taxes, property management, and debt service. So here we see the income minus the expenses that we talked about, minus the debt service is the cash flow that we're coming up with. In this example, over $150,000 in cash flow a year from this one apartment complex after we've paid our expenses. So again, the income, gross potential income, what our average monthly rent was, minus vacancy, other income, could be laundry, could be RUBS, and then the expenses, most of which we talked about right here. Subtract the debt service, and you come up with your cash flow. Most commercial real estate investors would say this is the most important reason to buy apartment complexes. Others would argue that when you buy apartment complexes, you're buying for appreciation. The second point being appreciation. Appreciation is when the value of an asset goes up. In apartment complexes, we don't wait on the market or count on the market to grow appreciation. That's more like icing on the cake. In apartment complexes, we force appreciation. We can do this in a multiple of ways, including fixing up the siding, the landscaping, the exteriors, the parking, or this could include interior upgrades. By making these upgrades, we're able to increase our rents. Our tenants are happy to see the upgrades, and they're happy to pay a higher rent as a net of that. And as a net to that, we're increasing the net operating income. We can also increase the net operating income by decreasing expenses such as vacancy. In this example, we're increasing our rent 2%, 3% in year 2, and still increasing our expenses by 2% all the way up into year 5 where we expect a sale. In our exit strategy, we see the total appreciation from this apartment complex at sale after year 5 is $845,000. Right above that, we do see that there was also a principal reduction of $385,000 from the apartment, which brings us to our third point, which is the mortgage paydown. So mortgage paydown is our number 3 way that apartment investing brings in profits. When most people think of principal paydown, they think of their primary residence, where a monthly portion of their loan goes to the principal paydown, the other portion going to the interest amount on the loan for the bank carrying the total amount. The great thing about apartment complexes is you're paying down the mortgage on steroids. And by you paying down the mortgage, your residents are actually paying down the mortgage in apartment complexes. The government incentivizes us to provide those residents with a safe and clean place to live. And the free economics give the residents a place to choose, especially in a competitive market, where they want to rent from and how much they're going to pay. Which brings us to our 4th point about the government incentivizing apartment owners by tax benefits. Tax breaks being the 4th and final way that I'm talking about today why apartment complexes provide an exceptional return. The earlier examples today and their returns do not even include the tax breaks that apartment benefits provide. Know that I'm not a CPA, and you always want to check with your CPA based on your own personal tax advantages. But I do know that no matter who's in office, the government incentivizes apartment complex owners by providing tax breaks. The biggest tax breaks in apartment complexes being depreciation. In this way, you can show a loss on the building's depreciation. Some investors get involved for this reason alone in commercial real estate to offset their other income through the tax breaks that apartment investing provides. You can have cash flow on paper and still show a loss. Again, I'm not a CPA, so you'll want to check with your CPA on their tax advantages. So through cash flow, appreciation, mortgage paydown, and tax breaks, we can see the different reasons why apartment investing provides above average returns on your investment. If you like this video, you'll like the next ones that we'll be putting out weekly. Make sure you subscribe and like so you don't miss out on an opportunity. Thanks again for watching.